traders, this is Blake Morrow and you are listening to the week ahead video for March 29th, 2020. Hope everybody's having a good weekend at home. Before I get into the charts and before I even talk about like the offer for ForexAnalytix, if I sound a little down, yeah, I mean, I might be. I think like everybody here, we have good days and bad days, and I have a lot of my family's in the medical community, so I am a little concerned today. You have good days and then you have bad days, and so today is probably one of those not so good days. But I still wanted to get this video out for you as I do every Sunday, because I think it's important, to help you hopefully navigate around the FX and the markets just in general. But if you haven't tried out ForexAnalytix, make sure you do so. This is our last day. We might extend it for a couple of days, but this is basically our final days of our volatility offer. We've had a lot of people join our community because there is a lot of volatility, and so we offer a good discount and to allow you to be involved in our community during these high periods of volatility. So take advantage of it, because it won't last forever. So hope to see you there. All right, let's talk about the FX market, and let's start off first and foremost. I'm actually going to go just directly to the dollar, and I want to draw this out for you guys. As far as the dollar goes, it's a very difficult read right now. It was, I don't want to say it was easy. This point right here, let me draw this out for you guys. False breakdown, that made sense. False breakout, that made sense. And then here we are now, and it's like, what do you do? We're coming into a week of we have our jobs report that's coming up, and you guys saw that the very unnerving numbers with the weekly unemployment claims. Our employment picture is going to continue to worsen. So the question that a lot of traders have is, do I buy the dollar because it's a risk aversion tool and I want to own dollars because there's a continued lack of dollars out there, so I want to be a dollar bull? Or am I a dollar bear because the US economy is taking a turn for the worse? Well, let's take a step back, and let's also note that it's not just the United States. This is a global phenomenon. So do I think that the dollar will fare better, or the US economy will fare better than, let's say, the European or Asian economies? The U.S., we went into this crisis, if you will, with a very strong economy. So do I feel that the U.S. economy will be a little bit more resilient? I do think so, at least near term, depending on how bad this virus ends up affecting the United States. And that really is going to lie directly on the shoulders of our response in the United States, the administration and their response moving forward. So, and unfortunately, it's hard to draw conclusions based on the, the unpredictability of the leadership here in the United States. So therefore, it's a really, it's a tough trade with the dollar. That's why I'm not going to focus so much on the dollar, but I do want to highlight a couple of key areas regarding the dollar. First and foremost, the dollar index is coming into the 618 retracement and the 200-day moving average. So my assumption would be that the dollar does find some support in this area. You talk about 98 to 97.85. We're going to be finding some support right around here. Whether it holds or not is to be seen. And you can see these massive moves that we've seen, whether you're talking about the euro, which is obviously the inverse of the dollar index for the most part, The cable, which has rallied quite substantially, by the way. Let's just highlight this really quick because I haven't drawn on here yet. So let's do that. Let's take from that high to the low. You can see we're almost at the 618 retracement. I'll use a different. There we go. At 125.16, so that's going to offer us some resistance. And by the way, on Friday, the dollar just continued to get creamed across the board, and that's a lot of that has to do with end of month flows. And we've got 2 more days left, Monday and Tuesday, as these end of month flows go through. So, I think Friday was. You can't stand in front of the freight train on a Friday. It's very difficult to do so. I mean, you saw the Aussie just rip. We're getting towards the 618 here in the Aussie. Kiwi at the 618. Dollar Canadian even pulling back below the 38% retracement in this very strong move, which, by the way, I do expect the Canadian dollar to find a lot of support down here near the 138. Let's just call it 138 level. I think the dollar Canadian is going to find a lot of support down here around the 50% retracement. So just understand that the dollar is extremely whippy. We're going into a jobs report week. We have ISM numbers. Obviously, people are going to be watching the unemployment claims, and I don't expect the picture to get any better for some time to come. But like I said, this is a global phenomenon. It's not just a U.S. phenomenon. So I do expect the dollar to be somewhat volatile, and these pullbacks might be bought in the dollar index as we approach some pretty key levels of support. So as I mentioned, I don't necessarily think that my focus or your focus has to be on the dollar. I think there's other opportunities, and one of them in particular I wanted to bring to your attention is something that I played last week, and I think I'm going to be dipping my toe into again sometime this week, is the Euro Aussie. So the Euro Aussie, and let me start off by saying that I think that the Australian, New Zealand commodity currencies, Canadian dollar, they're going to continue to underperform in this very sluggish growth, low growth, no growth, negative growth environment for the next several months. So selling the Aussie dollar or the Canadian dollar or the Kiwi dollar or the peso or the Norwegian krona, those currencies are probably better sold against other currencies. And the Euro Aussie is no exception to this rule. So I look at the Euro Aussie and we're at the 618. You'll notice that and that's from the last where the last move started. And I'm going to do a little bit more work for you here. So you can take this low from when we based, right? And you can also see that we match up with a 50% retracement. So not only do you have a 618, but you also have a 50% retracement. So confluence, if you will, in the Euro Aussie near the, let's just call it sub 180 level. I think that is going to offer a lot of support to trade against as the Euro Aussie eventually makes its way higher. Are we going back to 2? Are we going back to 190? Maybe not. I don't know. But I think that we're going to be able to play a bounce, and perhaps like a currency pair like this, we're going to eventually break, 211 to, start heading out towards, 220, 230. It's entirely possible. I just think that we, are looking at current levels as pretty good support to play against. I won't be around if it makes it all the way to 2. I mean, I'll be lucky if I play it for 200-300 pips to the upside and manage to hang on without taking profits. So but I think that this is going to be a tradable low somewhere around here, and I think that we have to use that as an opportunity. And again, this is just taking the dollar out of the equation because I'm really not sure how the dollar is going to respond. I don't know if the dollar is being sold because of the massive amounts of kitchen sinkness that the Fed has thrown at the market, or it's just more of end of month, end of quarter dollar moves. So, again, trading a cross rate might be a better solution. So that's just an example of something I'm following. And if you follow me on the F.A.C.E webinar next week, I'll probably be bringing you more ideas regarding like the Euro Aussie and different cross rates to play. I guess the other thing that I wanted to talk about today is I wanted to talk about the S&P. And the reason why I want to talk about the S&P is because this was my chart of the day on Thursday of last week when we were trading at the 38% retracement. I do believe that while the S&P is below the 38% retracement and below this downsloping trend line, the risk remains lower. Now, there's a lot of people that have drawn the conclusions that this market looks very similar to 2008 to 1980s and the 1930s and all sorts of things, when we've seen crashes in the past. And you can't argue those points. And frankly, I take a look around and I ask myself, are things improving regarding the virus? Have they improved over this weekend? Not that I can see. Are we going to get some more testing capabilities, which will eventually allow us to flatten the curve? Yeah, I think that's great news. Once every person in the world, or a lot of people in the world, can get tested and understand where we stand and how we can isolate cases of the coronavirus, so we can really flatten this thing out. But we're talking months away. Our death tolls continue to increase almost universally. Italy's starting to get a little bit of a handle, but regardless, I don't think that we're even anywhere close to being over. So, to see the equity markets bounce, I don't know if I could buy into we've got the coast is clear, this is good. So my opinion is, while we're below 2650, roughly 2700, these areas, and if you follow me daily, you know that I've been kind of highlighting those areas in the markets. Whoops. I think that that's going to be significant resistance. And technically speaking, when you only get a 38% retracement of a move, that usually is a sign of a continuation move. So let me explain to you what I mean by that really quick. So if you take this entire move here, and I should get rid of, well, no, I won't. I'll just keep the fibs where they're at. So you can see this is a 38% retracement, and let me delete some of this stuff because the chart is looking a little, messy, because, I'll probably end up redrawing a lot of this stuff in the future, but that's all right for now. You can see that from the high, right, to the low, we're at a 38% retracement, which comes in at 2644. So as long as we stay below the 38% retracement, the risk remains lower. Okay, that means that the chances of a resumption of trend, and in this case is downtrend, is quite high. So do I expect us to hit new lows to 2200? I mean, again, I think a lot of this really depends on the response from our government and how they attack, not a good word, how they handle the situation moving forward. I've always thought, and I think most people that follow me daily and know me, I always thought that the risk is that the S&P actually trades back down towards 1800. Because that's a major breakout point. I mean, obviously major breakout point. I think the risk is that we still see those levels. I'm hoping we don't. I really don't want us to go down there, because I think that that's technically very damaging longer term. I hope we can actually hold, like, where we're currently at, around the 2000 level. I think that would be phenomenal. and really keep this uptrend, as much of it intact as possible. But again, I think a lot of this, whether we see, below these levels, has more to do with the virus, our response, policy response, and that I can't, I can't forecast. Our administration is too unpredictable to be able to, figure that one out. But I think that this is going to be really important support moving forward. This, let's just call it 2100, 2200. Okay. All right. I guess I'm going to leave you with that, but I'll mention again, if you guys haven't tried out ForexAnalytix, this volatility offer will disappear here. If my team hasn't done it for tonight, it'll probably be done, early this week, Monday, Tuesday, as we wrap up the quarter. It's supposed to be done tonight, but I think they talked that they might just extend it out until Tuesday. But regardless, this is the time to be part of the ForexAnalytix community, and I hope to see you in the chat rooms. And if you watch the daily roundup webinar, that is only going to be for our clients only until it's released on YouTube after the fact, an hour or two later. So just giving you guys a heads up. Anyway, I hope you have a wonderful trading week. I'll see you on the F.A.C.E webinar tomorrow morning. As much as you can, enjoy your Sunday. I'm going to go take a bike ride. One of the benefits of living in where I live at is the weather's nice, and people distance themselves, but get a little fresh air by riding their bikes or running. And I'm going to be doing the same today. So please stay safe, wash your hands, keep your 10-foot distance, do your part, because our health workers are the ones that are really paying the price right now. All right, have a great one. My name is Blake Morrow with ForexAnalytix. Talk to you soon.